We've got a money manager right now that says there is one key indicator you need to watch that'll tell you when it's time to buy and when it's time to sell.
He'll not only tell you the indicator, but the exact price point for that indicator. Yu-Dee Chang is chief trader at Ace Investment Strategies. And Yu-Dee, let's get right to it. We're talking about the VIX, and you have a particular number at which point you would say it's time to buy stocks. What is that price point for the VIX?
Yeah, I think for now, basically this. If you look at the VIX, it really trades in ranges. So there's really no absolute high or absolute low. However, recently, if you look, the range has been maybe 25 to the downside or 38 to the upside. So if you look at it, and VIX is really on the chart is a mirror image of the market itself. So when the so-called volatility or the fear is at the highest point, usually the market makes a bottom. So when the VIX reaches about the 38 number these days over the short-term basis, it's actually a buy in the overall market.
Okay, you kind of tossed out a little bit too quickly how this really works. When the VIX is extraordinarily high, that means the fear is the highest, and that's when it becomes a buy signal because all the fraidy cats are out of the market, and this is the time to buy. Opposite goes for when the VIX is very low and there's complacency and everybody's all excited. Anything could happen. But let's talk about that number 38. Last time we saw it was in early August when the U.S. got its debt downgraded. Do we have to see something horrific like that again for it to climb and scratch its way up to 38, 39?
Probably, but don't forget, sometimes it doesn't have to come slowly. It may be one event that triggers it. Most likely news out of Europe. I think these days the market is, as you know, fundamentals pretty much goes out of the window over the short-term basis. Technical goes out of the windows as well. It's basically all so-called news headline driven. So that could be the so-called trigger to take that VIX with market volatility up to that 38 level. By the way, we're already at about 32, 33. We're not that far away from that 38 number.
So it's close to a buying point. By the way, let's switch to commodities for a second because you think the bull run on commodities may be just about over, right?
Yeah, you know, I'm a little in a different camp on commodities. I'm not a believer that, hey, commodity is the place to be, it's in the bull market. I do believe, though, there are tremendous opportunities in the commodities market, just like the stock market.
Where specifically,
Yu-Dee? Will oscillate. I'm talking about the oil market, maybe somewhere around the $87 to look for a buy, and maybe around $110 for a sell. I'm talking about precious metals, specifically the gold, somewhere around the 16.7 the level to be a buy signal, or somewhere around the 18.50 to be sold. I believe risk on, risk off, grease on, grease off. People are very confused these days, so we are very emotional these days. We're willing to buy because we're looking for the yield or the risk trade. On the other hand, we're scared and confused at all times, so I know qualm about being selling. Buying the dips and selling the lows. Easier said than done, but that's the way to make money in the markets these days.
Yu-Dee Chang, thank you so much for joining us. We have breaking news right now. TiVo numbers out, a narrower than expected